auto sales. Automakers reporting their June numbers. So far, the numbers look pretty decent. What is it going to mean for earnings when they come up in a couple of weeks for the big three, the big two, whatever you want to call them these days? Spencer Jakab is with us this morning on the Markets Hub to tell us about it. Spencer, we have had so far, I know Ford was out and Chrysler was out, right? With their monthly sales for June. What do you make of the numbers so far? You were writing about this morning on your head of the tape column.
That's right, yeah. No, so far so good. I mean, Ford was up 7%, Chrysler up 20%. Those are both year-on-year figures, and those are both a little bit better than expected. In terms of the headline figure, analysts were at 13.8, 13.9 million on an annualized basis, the seasonally adjusted annualized basis for the month, which is a very good number. It would be about the third or fourth best since the crisis, but it's down since the beginning of the year. We hit an annualized rate actually of over 15 briefly earlier in the year.
And that's sort of the real heart of what's going on with the automakers right now. Yes, they've come up off the mat. They've come off the crisis levels, the bankrupt days. Where are they going from here? They had a couple of good months, as you pointed out. At one point, the annual rate looked very good. Now they're starting to slow down a little bit. U.S. sales look pretty good. But why are the stocks doing what they're doing right now?
Well, a few things going on. First of all, if you look within these numbers, they are really encouraging. I mean, the numbers we saw in the beginning of the year were a little bit too good to be true. You had a few analysts up there, their forecast for the year, but we're running at a rate ahead of where the automakers themselves expect it to be at this point. The other thing you have to look at is how much they're making on the cars, which is pretty good. I mean, the incentives are down even versus last year. And last year, remember, you had a very, very tight car market the same month because you had the Japanese tsunami and you had these disrupted deliveries, and no one really had to cut you a deal, especially on smaller cars. And the fact that you're down slightly from that means that pricing discipline and production discipline is held. Looking forward, though, I mean, the problem, Europe is a big problem for these car makers.
It's the main problem right now, right?
Right, and that's really weighing on them. GM's, they really haven't found a solution. I mean, they're partnering with Peugeot. They've cut back production at the Opel division. Ford is having problems. I mean, but there's no real glimmer of hope there. GM has a real hot market in China, where it's still the biggest player through its JVs. Ford is trying to catch up there, but now even emerging markets are slowing down. So the U.S., having gone from being this awful market a few years ago, is now really the hottest car market in the world.
We just had up a second away the chart of U.S. sales, that annualized number, a little bit under 14 million annually. Not a terrible number, pretty good. Now we're pulling it up there again, so you can see that one. You know, off the peaks, but not terrible. But yeah, Europe and Ford put out a profit warning last week, right? GM said that Europe is going to affect their profits. It's very interesting, and they're not alone in this, but it's very interesting. And these companies, a lot of these multinationals got a big boost from overseas sales the past couple of years. Now that Europe is turning down, now that Asia is slowing down, the benefits are turning into a drag.
They are somewhat. I mean, Europe has been weak for a while, to be perfectly honest. But the thing about their domestic businesses is that they've taken out so much overhead. They haven't really been able to do that in Europe because it's politically complicated to do so. But here, I mean, they can be profitable at even if their auto sales drop back down to 12 million a year in the U.S. So they're much leaner than they used to be. The U.S. is really a profit engine for them. And then then you have Brazil slowing and China slowing, and Europe has been mired in a rut for a while. But I mean, I don't think that any of them are going to throw in the towel on their global ambitions.
And you talk also in the U.S. market, and you put this in your column today, the average age of a car in the U.S. right? Which is what right now?
So it depends who you ask, but experience says it's at 11 years, which is a record. And part of that is because cars are a lot more reliable than they were a generation or two ago. But that means there's also a lot of pent-up demand. So, say like the replacement rate for sales is 12.5, 13 million, but these, they can still have years of sales above that level just to get, to satisfy all the pent-up demand from the crisis. So this number is a real number. I mean, they're not pushing cars out there with heavy incentives, and there's a lot of still unmet, unfulfilled demand as the vehicle fleet is aged.
Yeah.